third question is looking forward to 2014. What do you think the greatest challenges are for hotel investors?
You know, as this recovery continues, I think the greatest challenge for an investor, for a hotel investor, not necessarily a hotel operator, but for a hotel investor, is to just not get ahead of ourselves. I think what we're going to find across 2014 and 2015 is not only will hotels and the markets continue to recover, but we're going to see a very significant liquidity in the debt markets again coming back. And that's already started this year with CMBS kind of reaching levels that it hadn't been since the last peak. And we're still very far from last peak. But as CMBS and other financing continues to increase, I think we're going to see, and we've already started to see this year, but I think next year and the coming years, we're going to see a lot of new entrants into the hotel investment space. And so you'll have new industry players that may or may not have experienced how bad the cycles can be, and that's going to lead to pricing increasing and just competition for assets. And I think the greatest challenge in that environment is to be able to keep your feet on the ground and have a view that is across cycles in making the investment. But I think a lot of the people hotel investors will be competing with will be thinking of it as more of a momentum play. And what we've learned in this business is that this is not real estate. It is real estate, but it's not only real estate. This is an operating business that is a street corner business. And the greatest value is created inside your four walls. Regardless of macro fundamentals, the real value and the real kind of value add is in delivering great services at the right price and the right cost. And we found in previous cycles when the markets really start humming, hotel investors are tempted to not think about the four walls and the people inside the hotel and the kind of submarkets, but they start to make macro bets, and that is dangerous.
So what you're really saying is discipline matters, and it matters a lot. With the cap rates being historically low relative to long-run averages, does that worry you as well in terms of what pricing looks like long-term?
It does. On cap rates alone, I'm of the mind that cap rates are generally a function of the risk-free rate, or like kind of the treasury rate. So then the spread above that isn't that out of whack, really. Okay. So being at a 6-7 cap for major market assets and being able to borrow at 2%, that's a 500 basis point spread, and that 500 basis point spread is very similar to when hotels were trading at a 10 cap and it was a 5%. So the cap rates themselves I'm less concerned about, but how you get to your third year pro forma number, that requires the value add, that requires the hard work. And I think we're in a market where for hotel acquirers and investors next year, you can't buy returns. You really have to earn them. You have to do it.
Okay. Well, thank you so much. Really appreciate your time today. Thank you for joining us on the Lenrock blog. Again, I'm Jan deRoos, and thank you for watching.
Thank you.